Hi everyone, my name is Jeremiah and welcome to my channel. Today we're going to talk about what not to do during the mortgage approval process. So let's get right into it. One, you don't want to apply for a new credit card. The reason being that before the closing of your loan, your credit could be pulled by the loan officer. And any changes could mess up the terms of the loan and even prevent you from having the loan in general. And also, applying for a new credit card means that new debt, which will increase your debt to income ratio, which is one of the main things or the key factors that loan officers pay attention to when considering approving your mortgage. So you don't want to apply for a new credit card. You also don't want to make any large purchases. I know that it's tempting for everyone when they are getting their new home. They want to buy that new furniture they've been dreaming of. They want to buy new appliances. They want to buy a lot of things that they will be using in their new home. But it's advisable that you wait till the closing of the loan or the closing of the house before you do these large purchases. It doesn't matter whether you're going to pay cash for it or you're going to charge it on your credit card. If you're going to pay cash for it, it's going to dip into your savings. And that could impact closing. All right, it might impact your closing because you might not have enough money to close. And also, if you're going to put it on your credit card, guess what? That's new debt. Okay, so it's going to increase your debt to income ratio, which could have an impact on the terms of the loan. The next thing is that you don't want to change jobs or quit your job or become self employed. I know that this might be out of your control sometimes because you could lose your job within this process. We're hoping that you don't lose your job, but you don't want to actively, look for a new job. You don't want to be actively looking for a new job in the job market. You want to wait till the closing is done, and after that, you can go ahead and look for that dream job that you're looking for, or you can change your job. You also do not want to use your debit card or your credit card excessively, and also you don't want to fall behind on the payment of debt that you have. So you don't want to make any unusual transactions within this time. You can go ahead and do your regular grocery shopping, your weekly grocery shopping, buying gas, things that you've been doing usually. You just want to continue doing it. You don't want to do any new purchases, or you don't want to introduce unusual activities within this period. Next, you don't want to spend money you've set aside for closing. All right, guess what? If you don't have your money for closing, you can't close on that dream house that you've been waiting for a long time. So you don't want to spend your closing money. Also, you don't want to omit debt or liability from your application form. One way or the other, the loan officer is going to find out. You want to be as truthful as possible. If you have any credit card debt, if you have car loans, if you have student loans, any kind of loan that you have, you want to make sure you put that information on the application form, right? You also don't want to create any inquiries within this period. You don't want to pull your credit by yourself because pulling your credit could have an impact on your credit score, which will impact the terms of the loan. Next, do not make large deposits without informing your loan officer. These large deposits may mean new debt. And if you have new debt, it means it's going to increase your debt to income ratio, which can have an impact on the terms of the loan. In general, the loan officer will be able to trace monies above $1,000 that are deposited in your accounts. Transfers between your accounts and also payroll accounts is okay, but any other transfer, you want to make sure you inform your loan officer. Last but not the least, do not co-sign any loan for anyone within this period. Remember that if you co-sign a loan for somebody, you are liable to that loan. So that means new debt, it will increase your debt to income ratio, which will have an impact on the terms of the loan. So guys, this is all that I have for you today. If you have any comments, make sure you comment below. And also remember to subscribe to my channel. Till we meet again, take care.